Welcome, ladies and gentlemen. It's Zurich Invest event time here in Zurich at the Grand Hotel, and we are very happy we have now Integra with us. And George Salamis, the executive chairman, wants to give us a beautiful update. George, welcome.
Beautiful update. Thank you very much.
Thanks for taking the time. It's almost 1 year ago that I've done the interview with Stephen actually here.
Indeed.
And so a lot of things have happened, and I think, well, we should talk about it. So what was the most important step the last 12 months you have achieved?
Yeah, well, look, there has been a lot that's new over the course of this year. We've completed a PEA study, which is basically the economic snapshot of the deposit, and that looked really good. I mean, you know, the first PEA that we put out was excellent, but we managed to double the results on this current PEA, doubled the mine life, more than doubled the net present value of the asset, still at a very high NPV IRR. We also did a resource update. We increased the resources substantially, I would say, mostly on the indicated category on Triangle of special note. So we doubled the resource on the indicated category while still preserving the inferred resources on Triangle. So that was
Fantastic.
A tremendous achievement. Oh yeah.
That's
yeah,
really
we were very,
amazing.
very proud of the work
Super.
we did. Yeah.
So let's dive into the numbers a little bit.
Sure.
Let's put it that way. What are the projected AIC? What is the NPV? Can you give us some detailed numbers on that?
Sure can. So the net present value of the project as it stands today is about $600 million. So a substantial
nice.
number,
Wow.
a great number. I believe the net present value is some astronomical 48% or 46%. It's in that range. We're using $1,250 gold as a gold price.
That's conservative.
So that's what everybody's using. Discount rate of 5%, and we now have more than 10 years of resources projected out into the future to build a mine on, so it's quite substantial.
Fantastic.
In terms of the costs, just by memory, our all-in sustaining costs are about 630 US, so it's quite we've got quite a good margin there. Right,
well, I like it.
Yeah.
Fantastic. So the mine life, you said like 11, 12 years?
Close to 11 years now.
But that's preliminary, right?
That's
so
preliminary.
there should be room for more exploration.
So there is. In fact, that's one thing that we couldn't shout too loudly about of late, but we're starting to shout it out now, which is the resource estimate came out after the PEA. So we've got basically a brand new resource base to work with for future studies. And if you just take a quick snapshot and add in the resources that we've just added in this latest resource update and put those into the PEA, perhaps we have 12, 13, 14 years of mine life, or perhaps maybe less mine life, but more optimized. So the production levels that we quoted in our PEA are in the 120 to 140,000 ounces per annum range. We peak at 150. Maybe we can do better than that, given the resources that we just released.
Okay, fantastic. Let's come a bit more to the, let's say, potential for the future. Where do you see room, let's say, for future exploration, for adding future ounces?
Well, right now, there are a number of things that get us really excited about the exploration. Of note, in particular, our guys are really excited by these C structures that we found on the Triangle. Basically, they're sheets of mineralization that are very continuous, up to a ½ kilometer in length and width. Not in width. I would love to have
that
half
would be
kilometers.
lovely.
But in depth. And so these are stacked and they're on echelon. And we're starting to see that they repeat themselves quite regularly. And there's one that's of note that's called C5 and C6 that we're starting to intercept. Only a small amount of that is in the current resource, but we're starting to step out on that, and that has huge potential to really break Triangle wide open, if you will.
Fantastic.
Yeah.
I saw also in your presentation that you have like a timeline to production over the year 2017. Can you elaborate a bit? What are the next steps? What do you have to do?
Sure. So that timeline essentially started in January for us. We're in essence on our way to building this mine. We're underground now. We're buying equipment. You know, our miners are advancing at a certain rate. We'll be into the bulk sampling program in June. And so it's essentially 18 months to production, very, very short time frame to some significant cash flow.
Yeah, absolutely. 18 months, well, that's really nice.
Yeah.
And I presume everything is financed and done, right? So you don't have any
I would love to say that.
Okay, still something to do?
Still something to do,
but
correct.
that's interesting. How do you solve that?
All right, so currently the capex that the PEA showed was about 110 million Canadian. That's very, very low when it comes to a project that produces up to 150,000 ounces a year. There's no project around that we are aware of in Eastern Canada or in Canada, period, that has that low capex. We currently have about $35 million in the treasury. Our capital expenditure plan for this year is about $28 million. So obviously we'll have to do a financing at some stage. We're currently looking at debt and equity, as a means of funding the gap.
Yeah.
There are a number of parties who have stepped up with some pretty interesting term sheets. So we're looking at doing something that's not too dilutive, obviously, to our shareholders to finance the balance of what we need.
Okay, and that's then the last one, or there's still something open then?
In terms of financing, well, hopefully that's the last one.
Okay.
I'm not going to make the mistake and say that's the last financing we'll ever do.
Yeah, exactly.
But,
Because you never can say, because we all don't know the future. But I mean, from the foreseeable data, I would call it.
Well, that sort of level of financing to, the $110 million that's going to be required to get us into production, that will get us into some serious cash flow, right? 90 to $120 million a year. That's substantial.
That's really a lot. And also we anticipate rising gold prices, so that would lift the margin then anyway.
It should, but the margins are still great, right?
Yeah, super.
Even at current gold prices, it makes a lot of money.
Yeah. Perfect. Then, George, thank you very much for
Thank
this
you very
update.
much.
That's
Yes,
super.
thank you.
Thank you.
Thank you.
And we look forward to some good news, hopefully. And I'm pretty sure you find the money, because that's not an amount with such a great project,
Exactly.
which is a problem.
Yes.
And so from that side, well done, I would say. And we look forward. Then 2018, we want to see you in production.
Indeed. Thank you very much.
Hey, thank you. Ladies and gentlemen, it was George Salamis, the Executive Chairman of Integra Gold, and you heard it, full throttle on the path to production in approximately 18 months. We hope to see them, to pour the first real big gold bars, approximately 120 to 140,000 ounces in annual production for 11 to 12 years initially, but as he elaborated, there's significant exploration upside, and I'm pretty sure they will find a lot of more ore which they can then process into their mills. So check out the company. The guys are doing really well. Thanks for watching us. Bye-bye from Zurich.
Thank you.